today I'll be talking about partnership and the basic
Okay.
fundamentals of partnership. So, according to Section 4 of the Indian Partnership Act 1932, partnership is always governed by Partnership Act 1932. Right? There are certain rules which a partnership firm has to follow. So, according to Section 4
Yes.
of the Indian Partnership Act 1932, it's a definition. If in exam they ask you to define partnership, right? So you have to write according to this section. Okay, section of
Yes.
Indian Partnership Act 1932. Partnership is a relations between two or more persons who have agreed to share the profit of a business carried on by all or any one of them acting for all. Now, what does it mean? That means minimum two persons are required to form a partnership. Now, these two persons have agreed to share the profit of a firm, right? And
Yes.
uh, share the profit of a business carried on by all or any one of them acting for all. What does that mean? Carried on by all means, suppose A, B, C, three partners are there. So either all of them will be involved in the partnership, or any one of them who will be acting for all. I mean, who will be acting on behalf of the others. Getting my point? So it may
Yes.
happen that A, B, C, three partners are there. They are doing business, but only A is managing the affairs. Only A is doing all the things, and B and C has invested their money only. Getting my point?
Yes.
So it can be carried on by all or any one of them acting for all. Correct.
Yes.
Now the features
Yes.
of partnership. Two or more person, obviously, as I told you, in partnership, obviously, then whenever you see, I mean, whether in sports or anything, when two persons are playing, then we say that it's a partnership, right? So in a partnership, two or
Yes.
more person are required. There must be at least 2% to form a valid partnership. The maximum number of partners cannot exceed the number of partners prescribed by the Companies Act 2013, which is 50 in any business, whether banking or non-banking. What they are saying is, as per Companies Act 2013, maximum number of partners cannot be more than 50 in case of any business, right? So minimum is 2, maximum is 50. Is it okay? Yes.
Yes.
Next is agreement. Obviously, there should be some agreement between two. Suppose we two are partners, we want to do a business, but there is no agreement with regard to how we will be sharing the profit, what amount we will be contributing to the,
Yes.
what we will be bringing
A
in, right?
partnership deed.
Yeah,
Yes.
partnership deed. So it should be either
Yes.
written or oral among the partners. The written agreement among
Yes.
the partners is called partnership deed. Correct.
Yes. Yes.
Then comes existence of business and profit motive. Obviously, a partnership can be formed for the purpose of carrying on the legal business with the intention of
Yes.
earning profits. So what does that mean is, all the trust you see, right? Trust are not formed for the profit motive. So it should be a legal business. That means you should not be doing anything which is not legal, right? It should be a legal business, and your intention should be of to earn profit, right?
Yes.
A joint ownership of some property by itself cannot be called a partnership. What they are saying is, suppose husband and wife, two people are there, they have jointly purchased a property. Just because they are joint, it cannot call a partnership, because they are not doing it, they are not purchased a property, they may not have purchased a property for the intention of earning profit. Getting my point?
Yes.
It's,
Yes.
it should be with the intention of earning profit. Fine. Then
Yes.
comes sharing of profits. Obviously, an agreement between the partner must be aimed at sharing of profit. If some person join hands to run some charitable activity, it will not be called as partnership. As I told you, charitable trust, it will not be a partnership, because they are doing for the purpose of charity and not for the purpose of earning profit.
Yes.
Fine. Further, if a
Yes.
partner is deprived of his right to share the profit of the business, he cannot be called as a partner. That means three partners are there, A, B, C. And suppose if you are not giving a share, that means Mr. A is deprived of his shares of profit, then he cannot be called as a partner. Getting my point? So
Yes.
agreement,
Yes.
it will mention what will be the ratio in which the profit or losses will be shared among all.
Yes.
Next is business carried on by all or any one of them acting for all. It means that each partner can participate in the conduct of the business, and each partner is bound by the acts of the other partner in respect of the business and firm. What does that mean is, act means every partner is bound to conduct the business, participate in the business, and each partner is bound by the act of other partner. Now suppose A, B, C, three partners are there. Mr. A has purchased some goods from, suppose, Mr. X, right? And
Yes.
firm, he has purchased goods on behalf of the firm, but he is not paying it. That means firm is not paying it. So B and C are also responsible for the act, are bound by the act which A has done on behalf of the firm. Since A, B,
Yes.
C, all three partners are part of the firm, so A, whatever A will be doing on behalf of the firm, B and C will also be responsible for that because they are the part of the firm. Getting my point?
Yes.
Suppose A is doing something on his personal behalf, not on the behalf of his partnership firm, then B and C are not responsible. Right? Suppose A is going to someone and saying that ABC Limited, we have a partnership firm. We want to take some money from you. Kindly give us 15 lakh rupees. So that is what that he has borrowed on behalf of the firm. B and C are responsible for it. But suppose A is going and saying, "Yeah, give me 5 lakh rupees. I'll return it back to you in 1 month." So that B and C are not responsible because he is borrowing on his personal capacity, in his personal capacity. Getting my point? Understood? I hope you
Yes.
understood. So every part. If you are not understanding, let me. Please let me know. I will explain it again. Right?
Yes. Of course. Yes. Thank
Yeah.
you.
So relationship of principal and agent. This is very, very important. If you understood this thing, then it will be very easy for you. What they are saying is each partner is an agent as well as partner of the firm. An agent because he can bind the other partners by his acts and principle, because he himself can be bound by the act of the other partner. Now, what is the relationship between principal and agent? Principal means, suppose you might have heard about different agencies. Like if I talk about LIC, Life Insurance Corporation, it's an organization, it's an institute in which they are hiring some agents. So what agents are doing? LIC agents, they are selling the insurance product on behalf of the LIC, right? On behalf of the company, they are insurance agents. They are working. Whatever they will be doing, whatever selling they will be doing, whatever marketing they will be doing, they are saying that we are a part of LIC. We are acting on behalf of the LIC. Like that, in partnership, whenever partners are doing something, they are acting on behalf of the partnership firm. So if, like I gave an example, if A does something on behalf of the firm, B and C are also responsible for it. Similarly, if B does something, A and C are responsible. C does something, A and B are responsible. So each and every partner is responsible for the act of other partner, because all the partners are agent and partnership firm is the principal. I hope
Yes.
this is okay.
Yeah. This is okay.
Yeah. Next is partnership deed. Since partnership is the outcome of agreement, it is essential that there must be some terms and conditions agreed upon by all partners. Such terms and conditions may either be written or oral. The law does not make it compulsory to have a written agreement. However, in order to avoid all misunderstanding and disputes, it is always the best course to have a written agreement duly signed and registered under the Act. Now, what does it mean is whatever agreement we are having, we can either have it orally or we can have it in writing. Whatever in writing agreement we are having, that is called as partnership deed. What they are saying is law does not make it compulsory to have it in writing, but it is always recommended that it should be in writing, so that in future if some dispute is occurring, then there should be some proof of it, right? If you have any oral
Yes.
agreement, you will not be able to prove it in the court of law. In my point, so it is always necessary
Yes.
to have it in writing. It will be always good if your partnership firm is registered. Registered means you will be having a partnership deed, right? It will be always
Yes.
easy for you if you are going to bank and opening an account. If you have a partnership deed, then only bank can open your account of partnership firm. Otherwise, on oral agreement, bank will not open your account. Okay.
Yes.
The partnership deed is a written agreement among the partners which contains the terms of agreement. It is called articles of partnership. The partnership deed should contain the following points. These following points should be there: name and address of the firm as well as the partners, name and address of the partners, nature and place of the business, what kind of business you are doing, at what place you are doing, duration, if any of partnership. Now, that what does that mean is duration means some partnerships are formed for some duration. Like for example, we two are coming together and we have got a contract from government to build, for example, a flyover. So flyover, for building that flyover, we need 2 years. So for that 2 years, we have come together to form a partnership. After that 2 years, this partnership firm will be dissolved. Getting my point? So if
Yes.
any duration is there
Yes.
of the partnership firm, it should be mentioned in the deed. Now, capital contribution by each partner. I hope you know what is capital. Correct.
Yes.
Uh,
Yes.
Capital means amount invested by owner into the business. So here partners are owner, right? So capital contribution by each partner. Whatever partner is bringing amount in the business, that is capital. Okay. Interest on capital. Now, before we move further, I will want to make one thing clear to you. That is capital in 11th standard, in 11th grade, you have read this thing, you have learned this thing, that separate entity concept or business entity concept. According to that, business and businessmen are two different things, right? Whenever we will be doing accountancy, we will be thinking from the business point of view and not from businessmen's point of view. Okay, so business capital contributed by owner is a liability, isn't it? We have seen in accounting asset is equal to liability plus capital. So capital is liability, but it is an internal liability. Getting my point? Since you can take it as a business is taking loan from its owner, and at some point of time it has to return back this amount. Like business, when businessman wants to withdraw something, they can withdraw it in the form of drawings, right, for the personal use. Okay, and since the firm has taken this as a loan from the partner, I mean the owner, then it has to pay the interest. So interest on capital, if any, it should be mentioned in the partnership deed. What interest on capital partnership firm will be paying to partners. Okay. Drawings and interest on drawings. Again, drawings means amount withdrawn by owner for personal use. They will be drawing it either from capital or from profit, right? Whatever profit they are earning, either they will be taking a part of it, or whatever capital they are having, either they will be taking out from it. So they are using it for personal purpose. Since they are using the business money, although it's a firm owner's money only, but since owner has given it and firm has taken it as a liability, so they are charging interest from the partner. Suppose partner has withdrawn some capital, they will be saying whether you have withdrawn it permanently or whether you want to give it back after some time. If they want to give it back after some time, they will charge interest on it. I mean, partnership firm will charge interest on it from partners. Okay. Now next is profit sharing ratio. Obviously, whatever the profit, whatever the profit will be there, it will be divided among the partners, and that ratio will be mentioned in the partnership deed. Next, interest on loan. Any interest, whatever interest, apart from capital, partners may have given some loan to the firm as well, right? So if any loan is given by the partner, what interest will be firm will be paying to that partner, that will also be mentioned. Okay. Now partners' salaries and commission. What does that mean is partner is getting profit, partner is getting interest on capital, partner is also getting interest on loan if he has given any loan. Partner is also getting salary. Now, what does that mean is, see ABC, all three partners are there, all are working equally. Now, A want to say B and C, all the three have with mutual consent have given A the extra responsibility of managing the affair. That means instead of appointing a manager for their business, he is doing the work of manager. So he'll be getting manager's salary as well. Okay, since he is doing something. Or suppose with the mutual consent of all the partners, Mr. A is given the responsibility of increasing the sales, and he has been given the commission on it. For 2% of sales will be yours. So that is partners' salaries and commission. If anything is there, it has to be mentioned in the partnership deed. Okay. Now for method for valuation of goodwill and assets. Now, what is goodwill? I want to know from you. What is goodwill?
It's the value of, it's the goods that you give away. It's an intangible asset.
Yeah, it's an intangible asset. Excellent point. It's a reputation which a firm has achieved over the years, right? For example, I have started a restaurant, and people don't know because it's a new thing, right? So people will hesitate to come to me because they don't know my taste, they don't know my service. Similarly, side by side, there is another restaurant of yours which you are running from last 5 years, and people have developed good taste. Your service is excellent. Your treatment of customer, I mean the people who are coming is excellent. Your ambience is excellent. So you have earned a reputation over the last 5 years by working on it, right? So it's a hard work which the business has put. For that, they are getting the reputation. That is what we call as intangible asset, because it is an asset. How it is an asset? I'll give you again an example, like the restaurant example. Now my restaurant is not working at all. People are not coming. So what I wanted is, you are moving abroad. Suppose if you got an opportunity abroad, you want to put a chain of restaurants in abroad. You are moving there, but you don't want to close this thing, right? So what I can say is, I'll come to you. I'll say, you give this hotel to me, whatever, because I'll be purchasing it in a running condition. Only the owner changes, right? So you are giving it to me, but you will say, I have worked for 5 years on this project, on this restaurant, and I have earned a reputation. Because of my name, people are coming to me. Because of my taste, people are coming to me. So if suppose entire restaurant, the premises, furniture, AC, kitchen equipments, all put together is 1 crore, you will take 2 crore from me, because you will say 1 crore is my goodwill which I have earned, right? You will say to me, you are also running a restaurant similar to me, right? But you are not getting the customers. Why? Because you are new. I am old. People know me, and that thing you will be getting from day one, right? From day one, you will be getting more sales here. So that is why I want reputation. I want reputation money. I want goodwill money. That is goodwill. How we will calculate the goodwill? We will study in this partnership chapter. There are different methods to calculate the goodwill. Okay.
Yeah.
Now, accounting period of the firm and duration of partnership. Obviously, whatever the accounting period normally is 1 year, that is from 1st April to 31st March. Duration of partnership, I already told you, if it is for any duration, it has to be mentioned. Rights and duties of partners, how disputes will be settled. Obviously, it will be given if any dispute occur, how this dispute will be settled. If after all these dispute is not able to get resolved, then they can move to court, whatever they want to do, right? Wherever they want to do. Opening of bank account, whereas it will be in the name of in the name of firm or partner. That means who is the authorized person who will be signing all the checks? Who is the authorized person who will be signing all the documents if a firm is getting any loan from the bank, right? Rules followed in case of admission and settlement of accounts or retirement or death of a partner. What rules to be followed? Admission means we are admitting some other partner. Now ABC, 3 partners are there. She wants to say that I am starting my own business, and I am not able to devote the time. I want to leave this. I want to get retired from this partnership. So he will retire. Another person will come. Suppose Mr. D is coming. So Mr. D, we are admitting Mr. D. So all the rules which is to be followed in retirement or admission will be mentioned. Okay.
Yeah.
Now, revaluation of assets and liabilities, if any, to be done. Now, why does business do a revaluation of assets and liabilities? See, I'll give you an example. ABC partners, C is going out, C is retiring. Suppose now C says, give me my share. What was my share? Please give it to me. I will say, okay, this is your share. This much you invested. This is your share. You take it. He'll say, when I joined the business 10 years ago, at that time, the land or building value was only 1 crore. Now, after 10 years, its value has become 5 crore. So you are giving share on 1 crore only. Why you are doing that? You need to revalue it, right? So whenever there is any reconstitution of partnership firm, reconstitution means whenever the partnership firm changes, that means any partner is going out or another partner is coming in, the assets and liabilities have to be revalued, so that whatever the profit or loss is there on revaluation of assets, that has to be distributed among the existing partners. That is my point. In this case, he was moving out, so he wanted to have revalued all the assets and liabilities, so that if any increase in the value is there after revaluation, that is profit, he can take that share as well. Okay. And for the incoming partner, why it is necessary? Because he will be knowing the today's value. What is the value of assets today? What is the value of liability today? Okay. So it is beneficial for both the parties, the incoming partner as well as the outgoing partner. Okay. Now, method of recording of firm's accounts. Obviously, there will be a method how you will be recording it. I mean, you have to do the Partnership Act, but they will tell the method how to do it, right? And auditing, if any partnership firm is coming under some audit purview. Audit means what? Audit means if your turnover, if your sales is more than 2 crore a year, then it has to be audited from a chartered accountant. That means what is audited? Your financials. That means profit and loss balance sheet has to be audited by a chartered accountant. So audited means he will check each and everything of yours in profit and he'll ask so many records, bank account statements, okay, GST returns. He'll check all those things. Then he'll be doing the audit. If a firm is audited,
so auditing is processing all the information and preparing all the final accounts and all that.
Auditing simply means is your financials are certified by a chartered accountant. That means he is saying that whatever information you have given in the financials, that is true and correct. Okay, suppose now your sale is only 20 lakhs a year. So you are preparing your financials, profit and loss and balance sheet, and going to bank to take a loan. So you may manipulate that. You may change it according to your needs. Suppose if you want more loan, you do more net profit, right? But when it is audited, means there is a proof, there is a comfort to the bank that if a chartered accountant has done auditing of it, that means it is pakka, it is true. It is not unfair, right? So because it is matched by all the GST returns, whatever sales you will be doing, you will be filing a GST return every month, isn't it? And all the things will be creating in your all the income will be creating in your bank account statement. So bank account statement together with GST and also the chartered accountant certification will make sure that your financials are okay and pakka and not manipulated.
Yes. Yes.
Okay. Next is date of commencement of partnership. Obviously, you may have prepared you have brought in the partners, but when you will be start the partnership business, that you have to mention in the partnership deed. I hope the contents are clear to you, right?
Yes, they're clear. Yes.
Yeah. Next thing is benefits of partnership deed. Now, what is the benefit? If you are having a writing document, writing agreement, what benefits it has? It regulates the rights, duties, and liabilities of each partner. Every partner will be knowing what are my rights, what are my duties, and what are my liabilities.
Yes.
It helps to avoid any misunderstanding amongst the partners because all the terms and conditions of partnership have been laid down beforehand in the deed. There won't be any dispute. There will be dispute, but there are less chances of dispute since everything is put in writing. Okay. Any dispute among the partners may be settled easily as the partnership deed may be readily referred to. Hence, it is always best course to have a written partnership deed duly signed by all the partners and registered on the back. Okay, since everything will be put in writing, so it will be easier. If any dispute occurs, they can always refer to the partnership deed. See, you have signed it. It was already written. When the partnership started, it was written and you have signed it. You have agreed to the terms and conditions of the partnership deed. Okay.
Yes.
Now, these were the things. Now, if partnership deed is not present, suppose partnership deed is not there, then what rules will be applicable? This is very, very important. I can give you a guarantee this question comes in the board exam, right? Rules applicable in the absence of partnership deed. Either 1 mark, 2 mark, 3 mark, but one question you will 100% get in board from this topic. Rules applicable if partnership deed is not present, what rules are applicable? Table on the left hand side is saying profit sharing ratio. That means if partnership deed is not present, profit sharing ratio will be equal irrespective of capital contribution. If partnership deed is there, it will be mentioned what will be the ratio, right? If it is not there, then suppose 3 partners are there, A, B, C, 1:1:1 will be the ratio. That means equal, 33%, 33%, 33%, right? And partnership deed is there, whatever ratio is given in the partnership deed, that you have to follow. Okay. Second rule, interest on capital. No interest on capital is to be allowed to any partner. If partnership deed is not present, no interest on capital will be allowed to any partner. If it is present, obviously it will be mentioned in it what rate of interest we have to pay on interest on capital to partners. Correct? Next, interest on drawings. No interest on drawings to be charged to any partner. If partner has withdrawn something, no interest on drawings to be charged if partnership deed is not present. If partnership deed is present again, then it will be mentioned in it how much interest to be charged. Okay.
Yes.
Salary or commission to a partner. Partners not allowed, not allowed to any partner. That means salary or commission is not allowed to any partner. Getting my point? If partnership deed is not present, no salary, no commission will be allowed to any partner. If partnership deed is present, again, it will be mentioned in it. Okay.
Yes.
Last is interest on loan by a partner. If any partner has advanced any loan to a firm, then interest on that loan will be allowed at 6% per annum. Okay, it is allowed at 6%. This is fixed. If partnership deed is not there, interest on loan, if any partner has advanced any interest to the firm, interest on that will be at 6%. If partnership deed is there, it will be mentioned in it. Okay.
Yes.
Now, distribution transaction of the partnership firm are recorded according to principle of double entry bookkeeping system that we know in accountancy is based on double entry book system only. Although there was a single entry system earlier, but that has been abandoned now that they are not doing it. They are doing
Yeah.
it with double entry. That means one will be debit, other will be credit. There will be two aspects of it.
Got it.
Yeah.
Yeah.
Now, I just wanted to ask is why partnership came? See, the first form of business organization was proprietorship, isn't it?
Yeah.
Proprietorship. Suppose you are running a restaurant, that which I gave an example, right, from 5 years. You are running it.
Yeah.
You are having a lot of business, right? But you want to expand. You want to make it a big chain, or what you can say
Yeah.
is you want to give franchisees of it, right? So what you will say, yeah, I don't have that much of money, first of all. Second, I
Yeah.
don't have that much of time to dedicate to some other work, right? So for that, what you will think, can I take someone as a partner? Right? If I take
Yeah.
someone as a partner, he may be very good in finances and all. He may be very good in marketing and all, or he may be very good in different kind of foods and cuisines and all. Right? So what he'll
Yeah.
bring? He'll bring expertise. His expertise. First of all, he'll bring expertise. Main thing is obviously he'll bring money. When he's getting a
Yeah.
share in your business, he will be investing some money. First of all. Second, he will bring some expertise. Right? Third is you are not alone liable for the losses. Your loss will be shared among two people. Getting my point? Suppose if a firm, if
Yeah.
you are doing it alone and there was a loss of 50 lakhs, entire 50 lakh was to be borne by you only. Now two partners are there. Obviously, it will be divided between two, whatever ratio
Yeah.
they have agreed upon. So that is the thing. That is the benefit of a partnership. That first of all, you will be getting an additional funding because he'll be bringing in some amount. He'll be bringing in some expertise, right? And your liability will be shared, isn't it?
Yeah.
And
Yeah.
although in a partnership firm also, the liability of a partner is unlimited, right? But I'll tell you
Yeah.
one. In a sole proprietorship, my liability is unlimited. That means if I have taken any loan, if I have taken any liability, if I'm not able to, suppose my business is closed down, even my personal assets are at stake. That means whatever
Yeah.
personal assets, I mean my home, my car, my furniture at my home, all will be at stake because I am the only owner. They'll be recovering it from me, isn't it?
Yeah.
Similarly, in partnership also, this is the common thing between two. Liability of a partner is unlimited, right?
Yeah.
Liability of a partner is unlimited because two partners are there and they are giving an individual guarantee as well. I'll give you an example. Suppose if you going to a bank, right? So I told you one point: principal and agent, correct? So principal means
Yeah.
it's a partnership firm, right? So A, B, C, three partners are there. All the partners have mutually decided that A will be signing the papers on behalf of the firm. Okay, signing the loan
Yeah.
documents. So loan document means A will be signing as a principal. That means on behalf of the partnership, and A will also be signing as an agent because he is a partner of that firm. He is responsible for all the acts done by other partners. Getting my point? So partners
Yeah.
also have a personal liability, means individual liability, and as well as collective liability as well. Collective means on behalf
Yeah.
of the firm. Individually means because you are a partner. Getting
Yeah.
my point? So these are
Got
points
you.
which are related to the partnership deed. See,
Yeah.
at Commercevaani, what we do is this class is being recorded, right? So even
Yeah.
if something is missed during the class, or if you are going for a group class, suppose if you are going for a group class and your class is missed, you are not able to attend that class,
Yeah.
your entire recording will be sent on your email ID. You can always go through
Yeah.
it. If you have any doubt, you can again listen to it again and again, right? And these notes are
Yeah.
prepared for each and every chapter, including your practical questions. Practical questions,
Yeah.
I'll be explaining it in it like this on screen. Then you'll have to do it at your own. I mean, accountancy is all about practice, isn't it? So
Yeah.
all of the things you have to, I mean, maximum of the part you have to do. Whatever the explanation part will be there, I'll be explaining in the class. Okay.
Yeah.
Apart from it, we are having a system of whenever I'll be completing a chapter, we are having a system of immediately there will be a mock test of it. And for mock test,
Yeah.
there will be an online portal of us where you will be
Yeah.
creating with your email ID, you will be creating your user ID and password, and you will be
Yeah.
allowed access to it where you will be giving your mocks. I'll be informing it to you that this mock has been uploaded. Kindly go through that mock. And
Yeah.
once you are done with that mock, once we are done with all the mocks, then at the end, when your syllabus is finished, then we have a mock
Yeah.
series of 7 mocks, 7 full mocks like your pre-board examination. 7 full mocks will be there, which will be preparing you for the board examination.